Hello, this is John Piper with the weekend video clip, and it's Saturday the 7th of January. I'm looking at the hourly chart of FTSE. It's been quite a strange opening week for the year, really. We ignore the opening markup, which is quite good. It's just gone sideways. It's pretty unusual, actually. Normally, the first week of a year is quite dynamic. I think it just shows the uncertainty that's going on, really. But the economy is getting hammered, essentially. The governments are reacting by printing loads of cash, debasing currencies, trying to stave off the debt monster, which I think sadly won't be appeased until the debt is eradicated. That's what always happens, always has happened. Governments trying their best to avoid it happening, but I think the odds are not that great that it will happen. So investors are faced with this dichotomy of, on the one hand, economy seems to be failing. There's talk of the bubble in China bursting, and the sort of global recession or depression coming in. Which I mean, sadly, I just think the short-termism, the desire to boost up the short-term profits, keep the economy going at all costs, has led us to this situation. It would be much healthier to have a few usual corrections along the way rather than what has happened. But I guess that's human nature. We are emotional animals, and thank God for that. I think life would be fairly tedious if we had no emotions. And anyway, so what does the investor do? It's a tough one. In my case, I look at the chart patterns, which is what we're going to do now. The key point, really, we've definitely got a correction here. This is an ABC. There's no doubt about that. Some markets different, the DAX is different, but this also is a very corrective form of move. There's no way you call it a 5. Okay, that's a ABC. So, the count really. This looks like some kind of C wave. If it's an ABC C wave, then it can go up to around here. If it's a 5, though, then of course it could actually make new highs, which is be strange. But obviously Elliott is just a guide, like everything else. Nothing, sadly, gives us the future. Wouldn't that be easy? But anyway, it would probably make life less interesting, I guess. Although that is a curse in Chinese terms. Anyway, so no change really. We're still looking for higher prices. Let's look at the wave pattern as it's now developed a bit further. Basically no change here. We've still got this wave 1, then a 2, then a 3, 4. In fact, this could be complete. So we could be seeing a 2 here. I've been thinking that maybe this is all part of 3. 1, 2, 3, 4, 5 to complete 3. But the fact we've now got a rather bigger move here suggests, in fact, it may just have been a 1, 2, 3, 4, 5. So that's complete. That's one wave up. We're now going to see a B wave to close this gap here. Of course, we could just gap through it, which would be interesting. As I say, the island reversal scenario remains intact at the moment. Not a huge one, but so we could see a bit more downside next week. If that in fact happened, it would be quite an interesting pattern. Let's go back to the longer term chart. I'll certainly make the situation slightly more complicated, even more so. That's 1, 2. This could be a 3, but the way forward's bound to go beyond. So maybe some kind of rising wedge, final rising wedge rally. We'll see. But there is a case for more downside next week. Let's look at the very short-term action. Okay, I'd be concerned if this decline counters a 5, but it doesn't really. It definitely counters a 5. It's more of an ABC, another A, B, C. So we could now see a C wave decline down to around there. I'm relaxed with our 50%. We're 50% short of FTSE via the ETF. I think that's the right stance right now. I'm not inclined to go high. I think we might slip back next week. And then it'll be interesting to see how that move pans out. But right now, there's no sign of a top at this time. Let's have a look at the Dow now. On the Dow, no change. We've got this 1, 2, 3, 4, and then this failure of the 5th wave so far. This could be a 4th, but it's quite a long 4th. Let's have a look at an alternative count on there. There's no real doubt about the 1, 2, 3. Maybe we've got some sort of slightly complex surreal wave 4 there with a 5 here, and now we've got an A and a B and maybe a C to come in again next week to make wave 2. Well, that's a more worrying sign, in fact. But again, we haven't got any indication of any impulsive action here. Let's just go look at shorter term again. Again, all very corrective action. A, B, C, pretty clear. B, and then the C wave decline. I think that could be a 5. The 4th got a bit lost somewhere. A, B, C there. Now it's just drifting again. It's just confused. I mean, it could be we're just gonna wait for events. The market is just going to, it doesn't know what to do, so it'll wait for an event to trigger a move. And I mean, there's plenty of bad things that could happen. There's plenty of good things that could happen. Which of course makes it very difficult to forecast, because if you're waiting for events to come in, I continue to think that the bad news is going to be far worse over time than the good news. That we are going to go lower. That we will see the debt eradicated. But of course, the powers that be are fighting a huge battle to postpone that, at least until the next term in the presidential election or whatever. Okay, let's have a look at the FTSE 250 now. Okay, this is the FTSE 250 on Yahoo. My own Morningstar doesn't go back far enough to get a picture here. But basically, we saw a move up here, so that's the all-time high as I understand it. We then came back here. Then the rally here took us to new highs, only just, but according to this chart, it was just slightly higher. I could be wrong. It's difficult to get readings here, but I think there was about 20-30 points on top. So it's in a failed break to new highs, by the looks of it. We've now got 5 waves down. Let's go to a slightly shorter term chart. This is the last year, and we can see a fairly clear 1, 2, 3, corrective ABC, and wave 5. So 5 waves down. And it looks a bit like a triangle actually at this point, which could explain the confusion we're seeing. Not definite, but we've got an A, B. I mean, it could be sort of A, B. That could be a C, with a D coming in, E. So a bit more to come before we fall further. We're looking pretty bearish, really. I mean, that's a fairly clear 5. I mean, okay, it could be a failed break, but even so, we've still got a corrective move here. So that's quite an interesting take on the situation. I'll have a quick look on FTSE, see whether any kind of triangular formation. I know it can actually, but I'll have a quick look. Basically, the answer is no. You can't do that. I'll have a look at the Nasdaq now. No real change here. We've got this impulsive decline here off the top. Key support at 2,000. I mentioned yesterday. A, B, C, and now it's just dithering with ABC so far. Well, of course, this could become impulsive. So it's the same basic pattern. Not much happening. Quick look at the VIX. Okay, the VIX is coming down nicely now. I'm not talking about 8 on this, but getting down to the 20s. It's getting down below 20, which is I think between 15 and 20 is a good place to buy. I mean, it could go down to below 15, but it doesn't often happen. I mean, it tends to be a time when it does move up. But of course, it can spend a long time in that area, so you have to prepare to wait. And you will see the value of your ETF or your spread bet if you do it by IG diminish. So it's a long-term trade. But I think volatility will come in this year, so if you don't mind waiting, that will be a good one, I think. And I mean, it's pretty close now. Really, it's a matter of personal choice whether you want to wait or not. I mean, you could obviously wait till something happens, but then of course the price will go up. So it's 6 of one, half dozen the others, really. Now look at the euro. No change here. We've still got this quite clear 5-wave form here, which counts as wave 3, with a 1, 2, and 1, 2 preceding it, and this is 1, 2, 3. So I'm looking for a 4, 5, and then 4th and 5th carrying on to finish this sequence. As I said before, looking at January, and then we're looking later on. I think the first half of the year is going to be positive, and the second half of the year we may well change direction. And quick look at gold to finish off with. Again, no change here. This looks like it could easily be the next leg up. I mean, the alternative is that we're seeing a 1, 2, a 3, and this is a 4, and it could still be a 4, which goes to a 5. But we've got the ETF, so as long as it does end up positive from a subsequent low, we'll still make money on that. So that's fine. But of course, the difference between an ETF and a spread bet needn't really be said. Anyway, that's all for now. Thank you for listening. Hope you found that interesting and useful. I'm back on Tuesday morning with the 10 o'clock report. Special report if need be on Monday. Have a great weekend. Thanks again. Bye for now.